Good morning, everyone. We are live, the Prospero.Ai stock market live stream. We are multicasting on YouTube and Twitter X. If you like what we share and you enjoy these streams, please be sure to like, subscribe, share it with your friends. We love doing the streams. We are back in our split screen, separate locations for today, but we still have that nice view in George's background. And we have a lot to talk about today. Interesting market open this morning. It opened like right when it opened, it seemed pretty calm, but a little bit of a sell off since. So we'll get George's view on what he's seeing in the markets and maybe why we opened up like that today. After a week of big events last week, we have some stuff to talk about, some earnings to cover, some stock moves to go over, um, and a lot to get to today. So let me make George the focal point, as he's the man with information. There we go. And good
Well,
morning,
Steven,
George.
we're gonna like, this is a new format. You're gonna run through all our topics, right? Like just run through all of them, talk a little bit about why you picked them, give people the background before I like kind of jump into my market view and we go through everything.
Okay. All right. So for everybody, so the first topic we're going to get to today is the Meta stock surge that we saw last week. It's been 100 upside breakout in Prospero for as long as I've been with Prospero. So we're going to talk a little bit maybe about how Prospero was so early on the Meta stock move and how it's continued, even as it's hit all-time highs, how it just kept going higher. So there's a lot going on with Meta stock. They had an announcement of a dividend for the first time. So we'll get to all of that. We have Eli.
Yeah, no, I mean, a lot of what we've been talking about is really coming to fruition. I think that that's the big thing. And I've just got like, while we do this, we're trying to like push this out so more people can see this live stream because I think there's a lot of real good stuff on it today. So I am almost done just getting it out to everyone that's going to kind of get this rolling for us. But that is almost done. And then we're gonna dive in. Stephen, like you didn't run down some of the other topics. Like go through each of them, and like why we picked them.
Yeah. So the
Like
next
why you
topic we
picked
have.
them. Because like I think like so like we're trying to like set the stage here, right, Stephen? Because I think people want to know like what's amazing about these live streams is Stephen actually came to me when he was doing his YouTube channel and he wanted to interview me. And that kind of blossomed into a relationship where he started to interview me on Prospero. And I think the really great thing that we have going, what we try to go for, especially in the comments, is Stephen is more like an average retail investor, and he brings me kind of his questions and concerns about what he's wondering about in the market. And I'm kind of drawing from my 20 years of experience as a value investor, as well as my 13 years experience as an AI entrepreneur, building different kinds of signals and market predictions, both for equities, but I've built things for college loans, corporate loans, S&P index ads. I did a project for McGraw-Hill Financial doing that. A lot of different projects and expertise that I'm bringing to the table, but sometimes it's hard for me to know exactly what to share. So that's the beauty of these streams, where Stephen is kind of feeding me these topics, and getting me to understand what like an everyday investor might wonder about every day. So that would be really helpful, Stephen. So situate a little bit what the topics are coming, why you chose them, why you're bringing them to me.
Okay. So then after Meta, the next topic I wanted to get to was Eli Lilly stock, which has earnings this week, and it's been another popular stock in the Prospero signals. So I wanted to get an update on it before earnings. Next topic, USA has become the largest oil producer in the world, which is confusing to me because I feel like the USA, the whole culture and like government focus and business focus was going against that. So that's an interesting development for me to see. Next, Microsoft has had tremendous performance since Satya Nadella took over as CEO. Their market cap has 10x in 10 years, which is just insane. And it's mind blowing for me to see that it's gone up basically 100% every year on an annualized basis. So that's crazy. And I feel like if you get too focused on the now, you'll get lost in the amount of progress that happens over like a decade, which that highlights. Um, next topic is a little bit about the Super Bowl because current event that everybody is probably going to watch, and the ad prices are astronomical. And the Las Vegas Sphere, which is actually a stock, they released their ad prices, which are 2 million for an ad takeover of the Sphere, which is normally 450K. So we'll just talk a little bit about, I guess, all the happenings of the Super Bowl and how it's big for advertising and all these companies if the ads are worth it. And then last, the housing versus income. I saw a crazy chart, which is kind of similar to the Microsoft story about like how things can just snowball so quickly as time goes on. But I want to save those numbers until we get there. But the numbers are crazy for the difference in housing prices versus income of like median average family size. So we'll talk about that, and we'll talk about if it's sustainable or you know everything that's going on in the housing market currently with rates. And then are we going to do the model portfolio today at the end?
We'll see. Like, actually, what I really need to do, is I need to get like, this is not where I'm streaming from, is not the best location for a live stream. So I'm actually getting a second location set up. I mean, not a location for the model portfolio. So later in the week, we're going to start the live stream in like a better, viewing spot. And then we're going to transition over to, a location that's better for that. So not today, I don't think I'm going to be, I could move my laptop today. We could do it. I think we could do it. I'm going to have to move my laptop. I think we could do it, Steven. But it's not ideal, but we're going to get to see those. So yes is the answer. We're going to do the whole thing. We're going to do the model portfolio. But now I've sent it off. I've sent off to everyone. So we're gonna have our everybody's going to get a chance to oh no.
So I think once we're finished sending it out, I think the super interesting thing today where we should start is obviously we posted about the Prospero performance so far in 2024, which is just like crazy. I believe we just crossed over a 400% annualized beat. If you could share if that's correct, the correct number. But after the performance, kind of just the market moved today, straight lower. I guess Jerome Powell's words kind of settled into investors, and I think the general consensus is that there's going to be less rate cuts in the market this year than everybody was kind of hoping for and anticipating. So maybe, even though it seemed like that was kind of the message last week, it took a few days for everybody to, stew over the words that Jerome Powell released. And now the market's finally reacting to the reality of we're going to get less rate cuts than had been previously thought.
Yeah, I mean, I think this sorry, I'm
I
trying
see
to.
we have 35 viewers. So let me
Yeah,
see in the
I'm sorry.
comments.
I just messed up. I sent the wrong. I just
So if you're watching this stream, comment the location you're watching it, YouTube or Twitter, and
I'm
comment if
almost
it's your
done.
first stream. I want to see if we have any new faces in here. I know we have our usual viewers probably watching right now, but let me see in the comments for any new viewers of the stream. Love to see new people. If you have questions for George, feel free to comment them because we love answering questions. We love addressing all of the real concerns or questions that you guys have and want answered specifically. So feel free to ask away. Hey, Mike, how are you doing? YouTube new. Thanks for coming to the stream. About to get into a lot of value here. YouTube, Shane, I recognize your name. We got some people. Michael Rogan, I recognize you. Michael Gangadine, New York new viewer. Nice to see you, Mike. We got a lot of mics in here. 3 out of 4 people that commented were Mike. That's a little odd. What are the odds of
I
that?
apologize. We were about to get started. I know it's very late on this. I messed up and I'm trying to get this out correctly, and it's just I sent the wrong tweet. I'm trying to multitask, try to do too many things.
Well, whatever you're doing is working because we're up to 80 concurrent viewers. So hello, Jeff, YouTube, not
All
new.
right,
Nice to
we're
see
gonna
you.
jump in. Market
A
view.
lot of people
We're
are
good.
new.
Okay,
Nice to see you
great.
guys.
Sorry, I got it sent off to the wrong people. Now we're on the right people. We're going 100 miles an hour. Great. So yes, right now, as the crow flies, we are 450% up on the market this year. The way I've been increasingly doing that, and we teach in our newsletters, it's all linked in probably the same in the next tweet that you got to arrive at this live stream. We teach methods. For the last 3 years, actually in 2022 and 2023, we were about at 50% on average above the S&P 500. Obviously, that's great. And this 450% is meaningless, honestly, if we didn't do that 50% each of the last 2 years. We're building a history and a process. And everything I'm going to tell you here, everything I teach in my newsletters is working better and better. We're honing a process. It's getting better. We have these signals that are built on primarily the options markets and where institutions are making their bets. So we understand and visualize where that's happening, and kind of teach you how to use that to improve as whether you're a short-term trader all the way up to a buy and hold investor. It works. It helps you. Our metrics have different things. We can dive more into it differently, but I want to give people that intro in case you're watching us for the first time. A lot of what we say is going to be built on top of these excellent metrics that are being wielded to help me and really anyone perform in ways that perhaps you didn't even think you could, because we do such a good job. I've actually not drawn a salary for 13 years of my career. I worked in value investing when I was 16 years old for the first time for a prominent business school professor at Columbia, Bruce Greenwald. I worked at my first hedge fund in value hedge fund, taught myself accounting when I was 17 to get that job. And what I've done a lot since then is work as an entrepreneur. When I was 25, I started my first AI company. I've kind of been ahead of the curve time and time again. And I've really only had one goal: making the markets more fair. I know a lot of you feel that the markets are really unfair, and I feel that way too. I've actually put in my blood, sweat, and tears to build these signals that are working so well. And I just want to teach people how to use them and get better and improve as investors, and do a lot to level the playing field that institutions have been working harder and harder to give themselves the advantage. We're trying to change that dynamic, and we're doing it well. You can see it in our performance. Now, without further ado, I will kind of get into what we're doing today. So Stephen lists the topics. I'll dive right into my market update. I'll give you the live look at what I'm seeing. And so for those that don't have the Prospero app, I believe it's linked, or you can go to our website, Prospero.Ai. Stephen can probably put in the links to the App Store for Google and Apple. Right. So when I go in, I'm looking at QQQ net option sentiment right now. There's a time series graph. That's my bread and butter. In 2022, I made 50% on the company funds. I bet the company funds. I'm just swing trading QQQ because this signal is so solid in terms of leading the market in the option sentiment. Right. So I'm looking at it. It had a bit of a lull last week. It opened up at 45 today, but now that it's at 22, so that makes me a little nervous. That makes me a little more bearish, perhaps. And obviously, we kept a pretty bearish portfolio. Right now, we opened the week with 8 shorts and 7 longs in our newsletter picks, which is our high conviction kind of value investing picks. I combine AI, these signals built on top, as well as my value investing background to really have a very high hit rate. And we're hitting it 78% on the year on those. SPY net option sentiment is at 53, more solid. But you can actually see, if you look at that time series graph, it's in a downtrend, right? So that sets the stage for everything else that we're going to talk about today, that it does look like we're in a bearish trend on both QQQ and SPY net option sentiment. As I explained to you in the graph, it's a little bit better on QQQ. We are in an overall downward trend, but a bit of a recovery, which is some hope. I'm not a perma bear, done very well trading both ways in this, and it's very important. That might not be available to everyone. One of the things that we do in our newsletter picks is we explain at the end how someone can hedge with, say, SQQQ and a long-only portfolio to just manage your risk with a small percentage of your portfolio. And anyone that reads the newsletters, that's a paid feature at the end for kind of more advanced investors. But you can always email me, George@Prospero.Ai, and I'm happy to give discount codes, especially to people that are willing to go on an investment journey with me that I can really train to use the signals. That's really what I look for. And there's lots of discounts for people like that. So we're going to jump into our main stories. The really cool thing about Meta is that we were on Meta since April of 2023. Now, our upside breakout rating, and that is actually something that even before net option sentiment was kind of our hero metric that I use every day to help me beat the market, which is very important. And one of the main things we teach is process. And I say I use every day to help me beat the market. Like, you might not be there in your investment journey. And I think a lot of AI companies, a lot of analytics companies are dishonest about that. Like, you might not be there in your journey yet. I want to, and we at Prospero want to help you get there in your journey, but I use it to beat the market. And I can teach you a lot of these concepts where you can get better and better, and maybe one day be able to wield it the same way that I wield it. But it's very important to understand where you are as an investor. And I think Steven should post, we have a great video on my 9 most important investing lessons. It's 5 minutes. It'll really help you think about these issues in the right ways. He's going to post it right here, right now. So, one of the things that I would say is like very important on this Meta story, and it's just like, it's the best lesson I can teach you as a value investor. My first boss, when I was 17, I actually got that job because I met him through my previous boss, Bruce, at Columbia. And he said, you should come work. At that time, I said I wanted to be an investment banker. And he said, you should come work for me next summer. You don't want to be an investment banker. You want to work in financial services, the buy side, hedge fund side. People call it different things. And I said, wow, that sounds like a great way to work. Like, how do I do that? He said, come work for me. So I show up at his doorstep. At 17, I was still in high school, started in high school in New York, right down there. And I walked in and I said, okay, I'm ready for your job. And he said, well, I got a little ahead of myself, George. You need to know accounting to learn this job. And I said, I'll learn without hesitation. And he said, okay, here are workbooks. You can talk to my analyst. You can come in every day after school you want. When you're ready, you pass the test and you do it. If you pass, I'll pay you the same as the rest of them. If you fail, there's no job. It's over. This is real life. And I went in there 4 days a week, Monday through Friday. I worked my butt off. I passed that exam. It flew in flying colors in June. I wasn't taking any chances. That's how I got started on Wall Street. That kind of thing isn't available to everyone. But that's why, like, in that video, I say the first thing that you need to do if you want to become a better investor is roll up your sleeves. You have to understand people like me and more are who you're up against. You're up against people, quite frankly, better than me, because right now I run a startup, right? I've worked on these formulas for 13 years. I've sacrificed my salary, but I'm not Bridgewater. I'm not Renaissance. These people have billions and billions of dollars in alternative data. And if you want to hope to beat them, you better roll up your sleeves. You want to hope to compete with them, you better roll up your sleeves. That's what I did. And that's the most important lesson. But I can teach you clever ways, especially in the short term, to minimize your risks. And that's some of the things we talk about. And I give you that background because when I started work, there's a book that I can't recommend enough called Fooled by Randomness. And it tells you the difference between if you're lucky or good and how to distinguish that. The same author, Nicholas Nassim Taleb, that wrote Black Swan. I think Fooled by Randomness is his better book. Didn't get as much notoriety, but the most important book you can ever read if you want to grow as an investor, trader, whatever. It teaches you how to understand the difference between having a process that works and whether you're just lucky, right? And I tell you all this because it wraps around the Meta story really well. Our upside breakout rating has been at 100 since February 16th of last year for Meta, right? And I'll situate that even further. If you go into our app and you click search and you click ranked by search, so upside breakout, you can see I checked last week, Meta was at 100 and the next highest stock was Tesla at 85. So that gives you an impression why Meta's been at 100. It's just that much better. And how do our signals work? Our signals are looking at demand for call options for long-term expiration options. We're looking at analyst ratings and price targets. We're looking at price momentum factors. And for those that don't know, a 52-week for a single metric, the most predictive signal for the stock market is 52-week difference. A lot of people don't know that. Momentum is important. It's not everything. We lean on the options markets because that's live, truthful bets. And you can see the truth of what institutions think in real time. That's why we lean on it the most. Because institutions can play around the dark pools, they can short things, they can long, they can fuck around with your head to send you messages. They don't fuck around with options bets. That's where the money's made. That's the truth, especially the options pricing. That's why we lean on that, right? So when I saw Meta at Upside Breakout 100, it actually took me more than 2 months of seeing that between February 16th, 2023 and April 30th, 2023, when I added it to the newsletter picks for the first time. And what made me so stupid in doing that? Because I spent 13 years building these metrics to cut through my own bias, cut through the noise. And I still thought I was better than those metrics. I still thought I knew more. I was like, Mark Zuckerberg's an idiot. Why would I bet on his company? That's what I said. But do you know who the idiot was? Me. And that's the other important investing lesson I can teach you. Step outside of yourself. Remove your biases. Because I told you that story about when I started at my first hedge fund, because the first thing my boss told me when I was 17 and I came in here, he sat me down and he said, you know what my biggest win was as a value investor? A garbage company. It's because everybody didn't like it. It was a garbage company. It wasn't sexy, but it had value. It produced numbers. That's the most important lesson I can teach you, because I was undervaluing Meta because of my personal feelings on Mark Zuckerberg, right? But not too long, I corrected. And I got in Meta for the first time. We've been buying and selling it. That's the amazing thing about our metrics. You can see our case study on Tesla. If you actually can find that, Stephen, if you go in, I'll actually do you guys one better. I'll let you guys see our data room, what we send investors. Because we're a very open book here at Prospero. And we don't have any secrets. We want everyone to know exactly what our plans are as a business. We want to earn the trust of retail investors. Anyone can go in and they can go in and look at our results. And there's a Tesla case study where you can see how we timed Tesla right using our metrics time and time again, because we get an exact feel for what institutions are doing. And I'll make your life easier, and I'll just post a direct link to that Tesla case study. And if we have a little time when I switch to my model portfolio later, I can walk through it, but I want to make sure we get through all the time sensitive topics here. Here's the Tesla case study. It's a really cool way if you want to see how we used our signals. And what I love, one of the people that, a power user of Prospero, at Trader Nate here on X, I believe he shared this. Some of you might be here because of Trader Nate. If you are, shout it out in the chat. Really love his approach. He's a great, methodical trader, and he has a process and conviction. That's the most important thing that I can ever teach. And Nate said that about me. He's like, one thing I respect about you is that you stick to your guns, and I respect that about him too. He has his process, and you have to develop your own process, but that's a very important part of what makes anyone a successful investor, knowing what you can do and knowing your process, right? So what I'm trying to say here is, even I have biases, but we got in a Meta when it was at 200. We reinforced, we did this with SMCI. That's also in, I think, the tweet of, what we shared in our newsletter yesterday. That's also there right at the top, our case study on SMCI. We've been in on these for the first time last week. I actually held them through earnings because I was so confident in what the signals were saying about them and what my view added up on that. Because I normally drop because I don't like earnings risk, but I was so confident and I was right, because we've built these signals that help me gain that confidence, help see where institutions are, And that gives me confidence, because you should never have confidence unless you know what institutions are doing. And Prospero's metrics can give you that, can give me that. I build my own expertise on top of that, but that's super important. And that's the beauty of this Meta story. Our metrics knew about it since it was trading at 100, 170. It's been at 100 in upside breakout. And it's not complicated why that works, right? When I say it works live, our options metrics update every 3 minutes. So you will see if it's at 100 upside breakout, it means institutions still have live bets overwhelmingly on options priced above where the stock is trading. It has analysts. One of the things we talked about last week is analysts kept moving their price targets up for Meta, right? That's the only reason you stay in high upside breakout. If, like, KeyBank is just one example. It had a 360 price target. It moved it up to, I believe, 480 last week. That looks like a very smart call, right? If it didn't, if these price targets stay the same and the price creeps up, it doesn't stay high in upside breakout. The price targets also have to keep creeping up along as the stock goes up, right? Same thing with the 52-week high. You're getting a live view. I had confidence in Meta. I remain confident in Meta since early 2023. The metrics gave that to me. And you can see there's a link to our case study. Stephen, can you post the link to the case study too specifically? You can search by stock, but not by industry yet. Good question. If you can post the case study for Meta, you can actually see all of this. And one of my favorite videos in it, actually, you should post that video too. One of our, early users, Jim Klein, that's great. He watches these sometimes. If you're here, Jim, shout us out. He made a video about how he has made money believing in the Prospero signals. When technical analysis tells you a stock is overbought, Prospero still had, and it will once it keeps going to new highs or local highs. Technical analysis breaks. What doesn't break is Prospero. We stayed at 100 upside breakout. We gave people like Jim confidence to stick with the trade because we're giving you a live look. We say if it's at 100 upside breakout, institutions still have overwhelmingly high options bets in real time. They're betting. Why would you remove your bets if they're still betting?
So the one thing I did want to touch on regarding Meta, they had the biggest single-day stock market move ever by market cap, which was 197 billion, and they did announce a dividend. And I wanted to ask you, how important is that dividend announcement in the stock move that we saw? Like, does it bring a whole new class of investors who are focused on value dividend with that announcement that they made?
Oh, huge. And I'll do you one better. It's like, and one of the things we're talking about, like James Villarubia, who is someone who works on, like, I'm working on, he's an AI fellow at NASA, and we actually met, for all your X people, we met on X. And we're working with each other we're working together on a really cool sector analysis, bottom up approach. Where instead of taking something like Tesla is the perfect example and saying, oh, it's consumer cyclical because it like sells cars, right? It sells cars, but it's also a tech company. So putting it in the same sector as Cracker Barrel is pretty dumb. I think that's why we're going bottom up. So we're looking at things like co-price movement, how something's talked about on social media or in the news, to like actually build bespoke sectors. So if you search in Prospero later on, we're going to say, like, if you want AI stocks with, say, high upside breakout, the metric that we're talking about, we can deliver AI stocks to you. We can form sectors in real time. That's what we're building with James. Anyway, one of the things that we're talking about, can you repeat the question one more time? I got a little lost wandering around, Stephen.
Just how important the dividend is for like bringing in new investors.
Yeah. So James and I were talking last week about that is, Meta converting from like tech R&D, like, that's all they care about, to like an IBM, right? Somewhere in between. They're going to still focus on R&D. Obviously, they have some really cool generative AI plays happening, especially considering they have Llama, which is open source ChatGPT that's just like blowing up. They're being so smart about that. But before they did it with, a lot of people used to use Google's open source libraries on deep learning. Now a lot of people use PyTorch. It's a meta library. They're being very smart. That's why we always love them. We always say combine your view, right? We look at institutions. They love it. They're betting on it. They have been since February of last year. We've been on top of that. But we also do value investing analysis. I do. And I say, you know what? I see why that's the case. Hold on one second. I have someone calling me. Hello?
All right. I'm going to mute George and take over the stream then for a moment. Let's see if I can get myself in a better shot here. There we go. I'm glad to see a bunch of people chatting. Xavier, that is a new studio. George just changed setups. The last stream we filmed, if you weren't here, I was there with George. It's an awesome new place, great background, big upgrade from the last streaming setup that we had. James, app's been great. Been a user since March. Thank you, James. That's a while. You've been here for almost a year now, so I'm sure if you've been here that long, you probably really love it. Thanks for that comment. Spiky Dude, I'm not gonna miss your comment. You're in here a lot, so thanks for coming back. Feel very fortunate to have found you guys. That's really cool. Happy to provide value. Happy you like the streams. Happy you're enjoying the app and you're investing.
Oh no.
George is back. I muted you just in case you.
I just realized. Yeah, I just realized I need my power cord too. I'm gonna let someone in. I'll be right back. Thanks for filling.
Yeah, no problem. George is a busy man, guys. He's all over the place. Xavier, good stuff. May need to change up the lighting a bit. Yeah, it's a little bright today. I think we filmed it a little bit later in the day, and maybe the sun wasn't as behind George as it is today. It does look a little bright, right? Is that what you're saying by the lighting? We're gonna have to. There's still some kinks to work out. Last stream, the video froze for like 5 minutes when we closed George's laptop, but we'll get there. Everything's a work in progress. I think we have probably a lot of new people in here. So let me just say it one more time. I'd be remiss if I didn't. Like, subscribe, follow. You can download Prospero. I shared the link to the app. You can download it from our website. It's in Google Play and Apple App Stores. We go live every Monday at 11 a.m., Wednesday at 3 p.m. And then on all of our socials, TikTok, Instagram, YouTube Shorts, we post the best moments from these live streams throughout the week. And we're going to be posting a lot more stuff on our website. We just launched a blog and an infographics section on the website. So there'll be tons of information. If you're new and aren't convinced about Prospero, just hang around because you'll see, and you can see by all the people commenting how good of a product and service it is. But yeah, anybody want to comment any questions, specifically stock market or single stock related for George when he gets back? Feel free. We have a lot of topics. I feel like it's gonna be a long one, but here's George back in here.
Yeah, sorry. We can do the Eli Lilly thing.
Yeah, so Eli Lilly was breaking the trend. I mean, the whole stock market seemed to go down at open, and they just ripped higher. And they have earnings, I believe, pre-market tomorrow. So you want to share? I mean, they've been a favorite in Prospero for a long time.
This is the important thing, right? It's that like we've been talking about it, and we talk about like there's the signals, and then there's value investing, right? And that's the thing that like nobody's offering you both. That's what's so special about what Prospero is, and I'm happy to donate my time to help people learn how to invest better. And so I'll tell you what the match is, right? Obviously, you can go in, you can see Eli Lilly, especially as a healthcare stock. Like you can go in, you can click on our newsletter, you can see how we actually rank. Like I said, we have a process. You can see how we rank these stocks by sector and choose what to pick every week. You know how we filter them with our screens on the metrics, and we walk you through. It's actually not that complicated. What we do, these signals are so powerful that it's easy to build on. So one of the things I talk about with Eli Lilly, and it's the same thing I kind of talked about with Meta, right? And why we love it is like Eli Lilly has an Ozempic competitor coming out, and like it's moving along. It had a news event about that, and I've been saying that. That's why I own it, right? It's great in the Prospero signals, but like anytime, much like with Meta, like I have a story. Like, the Meta, one thing that I left out is like in the Magnificent Seven, Meta is the third highest growing company in the Magnificent Seven. That's crazy. So like, yeah, this is what I'm talking about with the story. The story is super important. But Eli Lilly, right? It's got these great metrics in Prospero. And I say, what? Like, what's the rest of the story? You know what the story is? Ozempic competitor. It's coming to market. People are forecasting that. Slam dunk, right? Slam dunk. Like, even if there's problems in consumer spending, right? People are going to be buying that. Like, if it's a legit drug, a legit competitor, people are going to be buying it. It's going to really make the stock blow up. So if you're looking for a diversified long, I don't think it's too late to get into Eli Lilly. As I said, let's check. Let's check, right? I always love to practice what I preach. Let's check out Eli Lilly right now, right? Oh, check that out. Check out that graph, right? You see a big jump. It was coming down a little bit because, yeah, it started to get maybe overpriced. Some institutions were getting nervous, right? Jumps up at open, that news event, right? Net social 100 looks great. Like, and that's actually one thing that I think is very important between like net social and net options. I don't really necessarily care that much about net social unless it has other things going for it. But right, if you see something like that, if you see an upswing in net options, meaning, hey, institutions are betting more on it, they're getting their live bets, especially like net options is in the short-term options markets. So those are expirations 6 months or less. Like, whether you know the expression theta, it's like time value, right? But basically, I'll explain it to you. If institutions are buying options that expire in 6 months or less, the cost of that is immense. It means they really believe Eli Lilly is going to go up in the next, short amount of time. So yeah, I love to see that net option sentiment increase with social sentiment. It means people are talking about it. It means institutions like it. Like, I'm not saying Eli Lilly might not have a tough day tomorrow. It might. You have a big day. Sometimes you have a tough day. What I am saying to you is that I bet you'll be happy if you hold it for a year.
So we got some questions. I feel like we already kind of discussed maybe why the market, some potential things where it's going down. I remember seeing QQQ net option sentiment last week hit like 10, so it was really low. Maybe it's catching up. But I think this is an interesting question from Shane. He's asking if you
Yeah, let
have
me jump on
any.
it. I got it. So Shane, we'd love to do that, but let me tell you a little bit about my story, and I'll actually share this document, right? Because a lot of investors ask us this. A lot of investors that are like, I would say, maybe a little bit up their own butts, a little too much, for lack of a better thing to say. Sorry, it's the truth. Because it's just like all of these people that want to act like they're so much smarter than we are, even though we've been doing this for a really, really long time. I've dedicated 13 years of my life to building market-beating signals. And they want to say like, oh, it couldn't possibly be good because you're giving it away, right? Oh, I'm sorry it's so shocking to every other greedy person in the world that we actually see a great business model in working with people, partnering with them, earning their trust. So we can one day ask questions like, what's your temperature? And be able to model a pandemic in real time and essentially bring to everyday people the same thing that US senators got when they were shorting the market and making their ill-gotten gains. Well, they reassured the public that everything was fine and they saw the temperature data. They knew a pandemic was coming. We can be on your homes someday when we earn your trust, and we will work to earn your trust. That's why this is being given away for free, because I'm in the business of earning people's trust. And you talk to anyone that knows me, anyone that's known me for a while, I'm good at earning people's trust because I care about people. And anyone can reach out, email me. You want to see for yourself, I will teach you how to invest. I don't care if you use the Prospero signals or not. I have no problem telling you, you know what, with the amount of time you have, you should buy Vanguard Total Return. I have no problem doing that. I want people to be better investors. I want you to pay lower fees. I want you to have more money in your pocket. That's the future that I want. But I tell you all this because I've worked for 13 years to not trade these signals into the market, right? I can't give API access because hedge funds would steal it. They would steal the alpha that I'm giving you. I need to protect it. I need to hold it close, as I've done. I would love to give that to you, Shane. Not possible. If you want to keep getting the value in the ways that you're giving it, I can't give that API out because then they'll steal my formulas, our formulas at Prospero that we've worked so hard, put in so many years to be able to give you for free in a generous way to build trust.
So I think this could lead us to a really interesting place of understanding the signals. We got a question from Spiky Dude. He was looking at July at the money calls for Eli Lilly, and he's saying there's like no liquidity or low liquidity. And maybe you could speak to like how the signals like view that, or how that affects the signals, or what is low liquidity on like options? Does it affect the Prospero signals?
Who asked this? Spiky Dude?
Yeah, Spiky Dude.
Um, are you there? Can you say yes? I want a bit of a live look here. If you're listening, I can come back to it. If you can hear me, say yes. Otherwise, we'll come back. Spiky Dude, if you see this, come back. Just say I'm here. This needs to be live. Okay, great. How long have you been an investor? Do you trade options? Yes. How long have you traded options for? How long have you invested for? All right, I'm just going to give the answer. My answer is
He said he's just started.
yeah. So looking is a nice thing. You're going too far, right? I would say, and here's the thing: if you want to paper trade options, I'm going to tell you how to paper trade options. I don't recommend you trade real options until you've paper traded them for a long time and they've done well. I hope you can honor that. I don't like to be responsible for losing people money. It's too risky. 90% of people that trade options lose money. Retail investors. Let that sink in for a second. So now I'll tell you my general options recommendations, and Steven, throw in the Discord because I have a channel where I give these general options recommendations. I'm actually just going to post it right here. I did it the other day. Why reinvent the wheel here? These are my general. Sorry, I need to get like very with all the sun. Good problems to have. Here, Steven should link to our Discord. Those are my general. Those are my general recommendations on options. But my even broader recommendation on options is that you paper trade. You should be able to have a full year where you trade a long short and you've got at least 20% above the market before you live trade options. You can live trade options. You can do whatever you want, to be clear. These are just my recommendations. If you're going to use, say, maybe 5% or less of your portfolio, and I would say you have a job where you make at least $200,000 a year and no debt, play around with 5 or 10% of your portfolio with options if you want. If you want to just learn, take your lumps. But those are the only conditions. If you don't satisfy all those rules, you actually have my extreme recommendation to only paper trade options. Save your money. Buy Schwab dividend. Schwab, what is it? I think it's CHWD. CWHD. I always forget this. Anyway, CSHD, right? This is what I would honestly recommend to anyone thinking about trading options. Put all of that money that you're thinking about in options in CHHD. Every month, you can start taking half. This is my recommendation. Whatever. Start taking half of those dividends, like that you get from that ETF. Put that into options. That's my recommendation. Build a stable portfolio for yourself If you want to take half of that and gamble it, that's the responsible way to gamble.
Seems like great advice for people because it seems a lot safer than what most people tend to do. We got comments from a new app newsletter user. Can I find the
Great.
percentage allocation?
Yeah, we get this all the time too. I'm going to send you a doc. It's a great question. And I'm going to post our little doc. And then I'm going to tell you how I think about this. And you know what? I'm just going to nav for you. I'm trying to do this less, but I'm just going to nav so you guys can see how I get here, right? So we're going to share my screen, right? So I'm just going into the newsletter. Going in here. I want to grab our latest letter. Boy, what a morning, right? Sorry, I'm even though we finished the week, we're at 434. I never get sick. If we get to 500, maybe I'll take a day off, have myself a little party. All right. So right here, this is how you nap to it, right? So we have our short intro. This gives you like a little bit how to learn, some videos, really, really cool like thing. Then this link, this actually talks about like our products, how to use them, our best recommendations for how to do that. And I point you there because all these answers are there. But I also always want to answer questions too. And here's the thing, Nick. All of this is to teach a process, right? I said at the beginning, I don't know if you were here. This is how I use it. They're powerful signals. Anyone, like there's a really cool, I actually had someone come to me. Maybe I can share it next week. I would have to get her permission. But someone who actually works in kind of the venture arm in Amazon came to me and said, my husband uses your product. He's used it for a year. I just want to reach out. This is like, the results have been undeniable. And so I say that because the one thing I say about Prospero is anyone that gets to know the signals, no one's ever told me that it hasn't helped them. No one, not one person. There's people that say they don't understand. Hey, I get that. It's hard to learn about investing. It's hard to understand all this stuff. I'm showing you one more thing. You can see our testimonials. We have more than this. I don't know who's here who wants to give some like live testimonials about how well it works if they've gotten to know the signals, but it works. It helps you. It shows you things you're not aware of. It shows me things I'm not aware of. I've been a professional investor for 20 years. That's why it's built. It cuts through the noise, right? So I tell you all this because there is no pre-prescribed way to use Prospero. And I'll tell you a story. This is one of my favorite stories about Prospero. I generally build whatever people ask me to build. I'm the chief data scientist. I'm the tip of the spear on the products. I talk to retail investors every day. I really want to get to know your needs so I can build amazing tools for you that help you, right? One of the things I didn't build was buy, sell, hold ratings. And I'll tell you why. I said, I almost built it because I can build anything really. I can slice and dice this. For 8 years, I built AI. I did AI as a service for financial institutions, building a bunch of different predictions. I was a gun for hire, helping them build their predictive systems, a lot of the times beating them in head-to-head competitions, much larger. I beat a global top 5 bank in predicting their entire fixed income book. 100 million client ISIN pairs. And I did it because they were using old thinking. I use things like social media data and news to figure out the probability that a certain bond would transact. It made sense to me. They were thinking in old ways, but we do that kind of time and time again. And I tell you all of this because when I asked retail investors what an acceptable success rate on a buy rating is, most said 60% or above. And just so you all know, The saying on Wall Street is 51% right and you can start a hedge fund, right? So retail investors actually want a product that doesn't exist. So what did we build instead? A system, because it needs to be a product and a system. I am hitting close to 80% on my newsletter picks this year, but that's because I'm a trained value investor that built powerful AI signals to wield, and I can hit it that rate. I hit it 60% last year. I'm hitting right now in the model portfolio on, and if you nav in that alpha, in the alpha document, there's like a section of how do we generate our alpha in this. I'll nav to it so you guys can see. I posted that link to our data room. And so like you can actually go in and see our data room. Where did I put it? It's so sunny in here, I can barely see. Here it is. So you can go in here and you can see our alpha strategy, how we get and keep our alpha, right? And we talk about like the model portfolio, and you can actually see how it's updated in our trading letter right here. You can see this link. You can see how I update the model portfolio in 10 minutes. Why am I telling you that? Because you can actually see this is a paid feature, getting access to our model portfolio. We are at close to 700 investments and close to 44% above the market. That is absolutely incredible when you think that I update this thing in 10 minutes on a live stream. And I'm going to do it at the end of this. You'll actually see how I do it at the end of this today. And you guys are welcome to ask questions. But I tell you all of this because at the end of the day, whether it's the newsletter where I'm combining value investing principles, or it's the model portfolio where I'm just churning through the signals and just separating winners and losers, throwing into a portfolio, 700 stocks that we've gone through and 43% above the market. That is absolutely insane. Testament to the power of our signals. But there's 150 stocks in the model portfolio. Do I expect anyone to be able to do that? No. Do I even expect anyone to follow the newsletter picks? Most people, do I think shorts are for them? No, I talk to people about their growth journey as it relates to shorting stocks. And getting to a point of comfort, because you need to be reasonable risk tolerance. I don't want anyone to follow me. I don't want anyone to follow my model portfolio. I don't want anyone to follow my newsletter picks. I want you to learn from me. I want you to learn what I've learned. I want you to take your investment journey seriously and learn how to use the signals, fit it to your strategy. Don't take mine. Don't take anyone's. Don't let anyone tell you they can beat the market if they take your money. They're full of shit. The only people that can beat the market are taking check sizes of 10 million, 100 million. They're not taking your little check. And I'll tell you just why. Because these people that are claiming to beat the market, these startups, these other AI startups, we don't claim to beat the market. We claim to have a process. That's real. We follow investors. We show you how to follow institutions. That's real. That's real substance. These other people are hucksters, crooks. They don't even, some of them might even know they're crooks. They might even convince themselves that they can beat the market. But where I started, Fooled by Randomness, is super important. It's a great book. Nicholas Nassim Taleb. Figure out if you're lucky or good. But that is all to say, process. We teach process. Email me, George@Prospero.Ai. I'll teach you a process that works for you. Always happy to do that. All right. Net option, that is a great question, Amy. Net option sentiment is your North Star, right? But it depends on your strategy, right? It all depends on your strategy. I'd be worried if you see a downtrend in net option sentiment, whether it's the market, whether it's a stock, be worried. Definitely. And one of the stories I shared, that Alpha Diligence stock, I'm just going to pull this up and talk over it because it's important. And it's a great story. Like, I actually didn't even know. Sorry, I'm like beating. It's so sunny. Steven, you can see this, right? I didn't even know. Like this Trade Alerts product that we're going to release soon, I didn't know how good it was. You know why I didn't know? Because a lot of people would ask me questions like that, and I say there's nuance, right? Is people would ask me all the time because we grade stocks on a bell curve, right? So if something's at 80 in net option sentiment, people are like, should I buy stocks with 80 in net option sentiment? I'm like, that's relative depends, to be honest. Like, was it at 90 last week? I don't feel good about it if it was at 90 last week, right? Is it Tesla? Like one of the things, the reason that I actually one day figured out how powerful these trade alerts that we were gonna release were, the one day I figured it out, it was because for a year I told people this. I was like, well, Tesla typically runs, I'm not excited about Tesla unless it runs above 90. It always runs high, right? But a bank stock, if it's on an uptrend at 60, I'll buy that bank stock every day, right? So it depends. It really depends. Net option sentiment's the hero metric. Always start there. Always look at the trend. But it really depends. It depends on the sector. It depends on the trend. You have to get to know the metrics. That's what I mean. It is confusing. Investing's confusing. It's tough for me sometimes. I'll sit around some afternoons and honestly be like, I don't know what the fuck is going on here. It's hard. You're not going to figure it all out. I'm like I said, feel free to email me, Amy. I'm happy to help you on your journey. It's not easy, but I'll help.
Wow, I feel like there's so much valuable Prospero information going around today. It's we're getting great questions too, so I feel like we're covering a lot here. Um, do we have any
Yes,
more
Nick.
questions that we missed?
Nick, I'm gonna post. I posted this yesterday. I'm gonna post a 30% discount link to our trading letters. You get all of our portfolio updates in real time when you subscribe to the trading letter, and I will post I'll post a discount to that trading letter, a 30% discount to that trading letter that I gave to my paid investing subscribers last week. Sorry, it's like one of those, like, it's a real first world problem I'm dealing with where it's like so sunny in these big windows behind me that I can't see my screen very well.
So I think
Cool.
we covered and shared a lot of information. You want to get to maybe the Super Bowl story, a little bit of a lighter story about their
Yeah, I'm just
advertising?
posting I'm just posting the discount link to the trading letter right now.
Yeah, sure. So I'll just set you up for this.
Yeah, set
So
it up. There we go.
as everybody knows, the Super Bowl is this weekend. Who you rooting for? Comment. Let me know in the comments. But the ad prices are astronomical for a 30-second commercial in the Super Bowl. It's between 6.5 to $7 million. And then the Las Vegas Sphere, which went viral on social media because it looks so crazy. Its normal ad prices for a takeover of the Sphere is 450,000, and for the Super Bowl week, it's $2 million. So, do you think businesses are overpaying for these ads, or do you think they're worth it because there's that many eyeballs on the Super Bowl?
Um, I actually think marketing is a waste of money overall. Like, let me rephrase a little bit. The way people spend on marketing is wasteful. Because nobody knows the real ROI. Like nobody knows the real ROI of that Super Bowl ad. They don't know how many people are buying there. They just like spend because everybody else spends. And there's so many businesses that do a stupid job of that. Like I really personally like to know every dollar and where it's going. And that's why one of the reasons we've grown really organically. And we work with actually like, some of the influencers that you see funneling you here, yeah, we'll pay for retweets. We have some people that write threads on us, but I only really work with people that I know believe in the product. I don't just want people funneling. Like I want people that I believe in what we're doing. And that's a big difference. We are going to have to start experimenting with growing in different ways. But to answer your question, no, I think it's all a big waste of money, and it's a little bit like vain. Like I made a joke. There's like a big building back here. I don't know if you guys can see like the Alliance building. It's got a big name, and I was talking to my girlfriend about it, and I kind of made a joke, and I was like, she was like, "Who would do that?" And I was like, "Yeah, I don't know, someone with a small penis," and like that's a little gruff, But like, I think the person that did that, the company or whatever, it's some ego feeding BS, maybe some insecurity. Ego isn't always insecurity. But yeah, I think that like a lot of that Super Bowl ads, like I'm linking it up, it's like ego bullshit. You know, you want to see your brand up there. Like you have no idea if it's worth that money. Nobody knows if it's worth the money.
I remember the craze last year because there was like the crypto stuff. Or maybe that was 2 years ago now, but there was like five crypto commercials and like almost all of them are out of business probably today, besides like Coinbase, which is kind of funny. Um, I wonder what the main theme will be this year for all the companies. Um, okay, so next topic, and then do you want to spin it into your model portfolio after this,
Yeah, we got to do it.
or do you want to do that now? Because I can if we can if you
No,
want to.
next topic. Let's do it. I
All
don't
right.
have. Let me see my. Let me look at my next meeting. Yeah, I don't actually have a meeting until 2. So we're doing the model portfolio.
Okay. So this topic is kind of crazy. It's about housing or home prices versus income for the median family. And it's going from 1960 through 2024. So in 1960, the average median income for a family was 5,600, and the average home price was 11,900. Think about that average for our viewers, 11,900 for a home. Today, the average median income for a family is 89,800, and the average home price is 490,000. So basically, today it's like 5x or homes when in 1960 for your income. When in 1960 it was like 2x. And that's why so many people can't afford a home today, I guess, right? So like, do you see any solution for this, George, or do housing prices need to drop? Do incomes need to rise? What's the fix here?
Do I see a solution? Yeah, that's what Prospero is working on. That's the only solution. The government isn't coming to help you. The government is your enemy. The government is just making things easier and easier. The Democrats are passing tax evasion bills. The Republicans are passing like the Panama Free Trade Agreement, by the way, just to be specific. I'm not just like throwing random trash. Look into it. Like that was a tax evasion bill. Bernie Sanders called it out at the time. The person who broke that story died in a car bomb in Spain. These are the real things. These are real facts. Um, then we have the other party, Republicans, and I throw punches both ways, passing tax cuts for the wealthy. Right? You guys are getting robbed by both political parties. Anyone you vote for is robbing you. That's a problem. We're trying to fix the problem. I think that situation is hopeless because everybody's too busy bickering with each other and like thinking that their team is better while their team robs them. I don't have a team. My team is you guys. My team is retail investors. My team is people. So that's what Prospero is working on. Nobody's helping you. We're sinking into the ground. Like the American empire is dying. We're going further and further into debt. That's tangible things. That's why I say dying. Further and further into debt while we let rich people evade their taxes. And we let salaries, CEO salaries go up and up and up compared to everyday people. We're all watching that decay happen and we're doing nothing. I'm doing something about it though. We're at Prospero are doing something about it. We're creating mechanisms to balance out, create more fairness. But very few other people are doing it. And if you're expecting the government to come in and save you, they're not. They're not on your team. They're on the teams of the people that write their checks. Oh, and it's not the American people. That's the people paying for the sponsorships. Actually, one of my funny ideas, I think I've told you this, is I think it was like, oh no, actually, we don't need campaign finance reform. What we do need is a NASCAR situation where senators and House members have to like wear patches for their sponsors. Oh God, I would love that. I hope we get to see that someday.
Uh, that would be hysterical, but I don't think there'd be enough room for their sponsors there because those people take money from everyone. But we got a comment, George for president.
If you run out of space on your clothing, like then you can just like, you can just whatever fits in order of how much they give you.
Uh, yeah, I'm in total agreement there. I think that'd be a crazy idea. Um, do we want to let's transition over to your portfolio? Do you have to move? How long
Do
is
have
it
to
going to
move. So
take?
here we're gonna do. So we're not leaving people in too much of a lurch. Why don't you talk to people a little bit? The document I shared, you can pull it up in terms of like what our products are. Do you know what I'm talking about? I'll share the link one more time. Um, the products and tools primer, Stephen? I'll link it again.
Yeah, link
So,
that. I'll interact with the
yeah,
chat
pull it up.
and
Walk people through, pull it up on your screen, walk people through a little bit of our products. I'll be right back. I should be pretty quick, but it'll be good for you and your perspective of like what we do, the difference between the newsletter picks and the model portfolio, like what I'm about to show people. Why don't you do that? And I'll be right back.
all right, I'm gonna try to get that done right now. All right, everybody, you were left with just me for a few moments. I'm gonna try and pull up this doc on my screen, but my computer is very slow when we do these live streams. So let me see if I can get this pulled up. If not, if you guys want to comment anything you want to ask me directly, maybe my backstory with Prospero, whatever, I'll be happy to answer whatever you guys comment. But let me try to pull this up quickly so I can show you. I usually throw George the lobs, but he threw me this one. So what we're spitting into for everybody that's going to stick around is, if you're new and haven't seen this before, is George does his model portfolio updates. Sorry if you just heard that in my ear. But he's going to show you, like, he's going to go through the signals. He's going to show you how he picks stocks, how he makes the updates to the model portfolio. I have this doc pulled up. Let me see if I could share my screen. Let's see. Okay. Oh my gosh. Why didn't that work? Okay, it's not letting me show my screen. I think I have some kind of blocker on. It's not letting me pull it up, so we'll have to wait for George to get back. But okay, let's see. Did George already put up the 30% discount coupon? I believe he did. If you scroll, it might only be in the YouTube chat though. If you're, I see you're watching on Twitter, so I think when we comment on this StreamYard setup we have, it will only let us comment to YouTube. So it's available there. When George comes back, I'll try to copy it from the YouTube and put it in the Twitter for you if you can't go to the YouTube channel. But let me wait for him to get back so I can, be off screen and doing that for you. But it is on YouTube, I believe, if you want to check it out right now. Let's see, Ram Karan. Confusing, what's the difference between trading and investing letter? So the investing letter and the trading letter, the investing letter is less quantity of picks. George, I couldn't pull it up for some reason, but good to see you're back. I was just answering questions.
Why is it?
My computer had some kind of like block or something. It wouldn't let me share. But okay, Marie, you got it from the YouTube channel? Okay, let me know if you get it, because if not, I'll share it into the Twitter. Actually, I'm going to do that no matter what, but comment if you actually see the link, and so I know you got it.
Okay. I am getting ready. I'm gearing up to do my model portfolio update. And just so you guys know, like if you come to these, we generally do these at I'll be right back. I need to get something to drink. I'm really parched. I'll be right back. See you.
Okay. I see a comment from. So for HP who commented, they're looking for the GCT ticker on Prospero. There are some companies that are not available on Prospero yet. Let me see, what is GCT? And then there are some things where if it's an index and Prospero doesn't cover enough stocks within the index, they're also not available. But that's your answer for that.
Trading and investing letter. I mean, it's a huge difference. One's about trading and one's about investing, right? Like the model portfolio, so I'll show you right now. I'm trying to like eat something. I'm in such a rush this morning getting everything set up, right? So it's kind of self-evident. I don't mean to be too dismissive, but it'll show you, right? So this is our model portfolio, right? This is all of our live things. And we have 68 longs live and 67 shorts live. We're pretty neutral. We neutraled out, right? We have 700 investments in since 6/4. So in about in about 7 months, right? Now we can see the investing layer, right? It's less churn. We're churning through, we're creating a lot of things every day. And you're about to see how I update the model portfolio. So you'll see exactly how fast we churn and what we're doing, right? Now 2023, right? 154 investments on the year. And now we can see the 2024 newsletter picks. That is 49 in a little over a month. So we're actually morphing it, but still, it's like the other one where you saw 68. Right now we have 7 lives, like longs live, and 8 shorts live, right? So it's nowhere near. So the difference between the investing letter is that different, right? One is trading, high churn portfolio. One's investing, more of like a longer view. Now, the one thing where I do give people is a little confusing is like for an investing letter, we do churn pretty fast, right? But here's the thing. It's more about process than anything, right? And I'll tell you what I mean by process. You go in, you look here, like, right? You see the logs. We have a list. We show our system. We show where it ranks in our filters, right? And how the technicals are doing. Like we do this. That's process, right? Unfortunately, we do churn through the investing letter because, like you see right here, right? We close a lot of our shorts because look, the technicals turn. They were lower in the screener. That's why we close these. Unfortunately, like we don't want to churn, but we churn through a process. Does that make sense?
So I'm trying to figure out how I can copy this 30% discount link. It's not letting me do it.
It's annoying. Let me flag that. Sorry. Thanks for the update, man. It's hard to do this sometimes. Like we have like my co-founders that I just messaged. They're amazing. We've all actually put money in to the company, not taken it out. Like we are very dedicated to this cause. But they have other jobs still because as we're closing our funding round. So the investing letter, Xavier, like the investing letter, everyone, it's free. Everyone's available. The trading letter is just like the model portfolio. When you pay for the trading letter, you get the trading. You get the model portfolio. Really simple. As you're about to see, you actually get, like, if you come to these live streams, I show you the model portfolio for free. Granted, you don't access it all the time, but you get to see what's in there. You get to see what I'm adding and dropping. That's a nice gift we give to the people that come to these live streams. And we're about to dive in. You're going to see how the sausage is made. You're going to see Stephen and I like to time this, see just how long it takes. But I'm getting all the right things opened up. So when I do, and like, please feel free to send me any questions. And we're happy to answer them. While I'm just opening up, you'll see in a second, I'm just opening up all of the relevant tags that we will need to build our screener for today, that we're going to throw into the newsletter, and I'll show you in a second. It's how I like basically like pick what stocks I'm going to go long short, and I'm just getting it all up in the background. So I can actually just like keep talking, answer any questions that you might throw my way. And then when I get going, it'll just be all doing the portfolio. And I am going to try to narrate it a little for you guys too, so you hear what I'm doing while I'm adding and dropping. I'm going to talk to myself a little bit. No shame. This is my process. If there's one piece of like broad career advice I can give everyone, and one of the things that's like really helped me is just like, I believe in what I believe. I chase it down, and I don't let anyone tell me what is good or bad. I do what I believe in. And that's how I've gotten here. All right, I think we are pretty much good to go. Let me pull up the right Slack channel. I'm about to share my screen. Stephen, did we get any other questions that I should answer before I launch in?
Oh, yeah, we actually did. Matthew Wolf's just looking to see, is the paid midweek newsletter the trading newsletter? A lot of people are thanking you for the
So there's
advice.
an investing letter. There's a paid version of an investing letter, right? It's all in the sheet that I sent. It's in this tools primer. I'll post it one more time. It's all written out here, but I'm always happy to answer questions too, right? It's all here. Like, there's an investing letter, right? There's a free investing letter that everybody gets every Sunday for free. No questions asked. Then there's a paid add-on to that investing letter that on Sundays just gets you a little extra letter where I give you my live hedges, right? And actually, it's a great time to buy the investing letter because I was so tired last night. I was up until midnight writing it because of this meta case study that I owe an investing letter today. So it's a great time to buy it. You're going to get a letter, but you'll see an opportunity to subscribe to that when it goes out too. The Wednesday midweek investing letter is part of the investing letter, right? It's actually cheaper. That's $10 a month. It's more of just like growing a little as an investor. Trading letter is more every day. What you're about to see me write, I write that every day. That's more advanced tactics. That's a high churn portfolio. When we actually price things for that reason, it's very much my attitude that people should basically have access to the strategies that fit them, right? So like one of the reasons that I actually got comfortable with paid products used to be all free, but I'm like, you know what? Wait a second. Like, I don't necessarily think these strategies are for everyone. A trading letter, trading strategies, my market view where you're potentially swing trading the market. So I don't mind putting a little extra price on that to say like, look, if you can afford this, more advanced tactic, great. I'd love to teach it to you. But if $20 a month is an amount that like is not in your budget, I don't think these trading tactics are in your budget either. Sorry. But you get to watch here for free. But not like the updates, not all like the live portfolio refreshes. Eric, I had a call with Eric, and I'm embarrassed for myself that you don't know this yet. I didn't teach you well enough. It's an indictment of my teaching. SMCI is SMCI, right? Look at it live. Look at it live, right? I'll look at it live with you. What do we see, right? High short pressure, high dark pool. Scary, right? Objectively scary. But stability, 77 growth. First, holy crap. Upside breakout higher than downside breakout by more than 50 points, right? Institutions are way more in favor of this in the long term than the short term, right? I mean, it's like betting for it than against it long term, right? So if you want to hold SMCI for a year, fine, go for it, right? You see that in the long term investors. I don't think you'll regret it. But 91 dark pool rating, 92 short pressure, that's a lot of risk in the short term, right? I still own it, but I'm watching it. I'm going to get it super quick. if I see it turn, because that's super high. But also 77 net options, 81 net social, not bad, right? There's risk and reward in the short term. So my advice to you, if you own, like, you want super easy, you want to own 3 stocks for the next year, we've talked about it. Meta, SMCI, Eli Lilly. Thank me later. I can't promise you. I fully expect them to beat the market pretty well. I can't promise you that the market's going to have a year. I can't promise that. I expect them to beat the market. I expect you to be happy if you buy just those 3 stocks today. Those are live looks. Live, they all look real good. But it might not be the best time to buy SMCI given what we said. Does that all make sense? Yes, no, maybe, Eric? All right. Well, maybe you'll get back to us later. It's model portfolio update time. I just checked my email. All these people saying they want the trading letter. I put in this discount code and nothing. I'm a little insulted. All right, here we go. We got it. We got the thank you. Yeah, I mean, and that's the thing. Like, I can't stress it enough. You have 10 signals for a reason. Those are like the 10 signals that I would consider vital, right? They all have different kinds of information. Sometimes they're giving you conflicting information. Welcome to the market. like I get conflicting information all the time. You have to figure out what you deal with it. And sorry, it's a fun. We're having fun here today. All right, here we go. We got the weird screen of death. We're doing it. We're doing the update. My first check. Well, actually, even before I do this check, I want to just take a look at the market. I want to take a look at the market. I want to see where we're doing. And Steven, we're losing, QQQ's losing that momentum a little bit. We're going to want to look bigger. All right. Don't love that. We're losing some momentum on QQQ. Looks like we're going to go a little more bearish. Definitely. Steven, what are you seeing on net option sentiment? We gave a refresh at the beginning. What are you seeing?
QQQ is at 38 and SPY is at 53.
That's definitely up from where it was. So I do like that QQQ recovery, but we're still not even in the bull zone, so it's nothing really to write home about, right? All right, now you're going to see me do my checks. Step 1 is I'm doing a net option sentiment check on my longs and shorts because I want to see. My thinking here is that I got into these because they painted a good complete picture, right? If I want to get out, I'm looking for something like this. BLK 24 net option sentiment, right? So I want to come in and I want to say, okay. What's going on here? Oh, yeah, that 30-minute chart. BLK is dead in the water, as far as I'm concerned. Toast. Now we're actually going to bring that on to our second screen. Okay, so we're going to keep looking back to my mouse is being really temperamental today. I don't know what is going on with it. I don't know if it's like what the battery or what the deal is. I think I'm gonna get a different mouse. This is just way too annoying. Steven, I'm gonna be right back. Sorry everyone. We're going through some growing pains today.
I'm surprised you have a backup mouse. That's pretty prepared of you. I
I'm
don't think
always
I have a
prepared.
backup mouse. Yeah.
I'm always prepared, and I'll be right back. You know, we're gonna get rid of this confusion here and get rid of this keyboard. Because it comes with the keyboard, you know, I don't want to confuse my computer.
These are the challenges, everyone, of changing streaming setup. George is in the midst of relocating, so but after you fix these problems, they're fixed forever. So he'll have it down pat. I'm so happy to see all the people that are like thanking George and the Prospero streams and enjoying it. It really makes me happy that we're doing this and you guys like all the value and information you're getting from it.
Yeah, right. It's a very lively stream this morning. All right. Oh God, that's so much better. Thank you for your patience, everyone. This was really annoying to me. All right. Anything else? Nothing else looks of particular concern. I have had my eye on we'll look at these 64s. I did just drop BlackRock, so I know Apollo is another finance. I don't want to I like to make sure I'm not too underexposed. Um, so I don't think I'm gonna drop Apollo. But what did I say? I already forgot. What was the other one? Cigna. I don't like that. God. No, we're keeping Cigna. That's a nice uptrend. MasterCard. Oh, TMO. We definitely want to look at TMO because I'm looking at these other ones just so you guys know. I like them eyeballing the industries, and I don't necessarily. I don't like to be overexposed. Oh yeah, TMO is gone, dead, done so. I got rid of BlackRock and I didn't want to. I just rejected Master. I was looked at Mastercard. And I was that's a little low, but I don't want to completely divest all my all of my certain things. So of certain industries, right? So I'm going to look at PH because I know PH is. I see a lot of industrials in my portfolio, and that's in the industrial sector. So I'm going to just check that out. I don't want to get too overexposed. Oh yeah, that's great. We're getting rid of PH too. Yeah, and we just the main reason that I do it this way is I know that I just want to get rid of the bottom of my the bottom of these things. Just it's a good way to make sure that I keep maintaining a good mix. If I'm just kind of chopping off the bottom of these net option sentiment readings. All right, so we want to get out of here. Just gonna remove it. I'm never going back to that. Okay. We are doing that. How will I keep pulling that up? We're doing the same thing on our shorts. See if anything has gone the wrong way on us. Because we are steering here. We are steering towards shorts here, but we also even though, and this is another kind of good lesson, even though we're steering towards shorts, it doesn't mean that it doesn't mean that all of our shorts are good. Steven, I actually meant to ask you, can you, while I'm doing this, can you look at give me a live look at Meta and CACC? Because those are a few of our longs that have not done well. Jesus, SMCI blowing up shorts today. Blowing them out of the water. Yeah, all those people that are worried, SMCI cares not about shorters. But I mean, you saw us
Wow,
call that out. We sorry,
George.
you have something, Steven?
Meta. Oh no, it's still at 100 upside breakout. Net option sentiment
I'm holding on to
92.
Wern because I see it losing momentum here. So like I saw it at 59 net option sentiment, but I'm going to be pretty picky about these because of the bearish lean, right? I actually might even start ignoring this. I do want to check this out. So I do this sometimes. SQM, I'm just going to go in here and bold because I might want to drop SQ. I don't love that. But now I'm just going to scan max N. Keep screwing me. There we go. We held it. I'm so happy. I almost sold it last week. Good call, George. Whatever. We're holding it. That was great. And here's where I talk to myself. This is no value. Me complimenting myself. You don't need to do this as an investor. All right. Or a trader. You don't need to get too big of a head. But it's good to celebrate your victories. X-ray, no, going in the exact direction. Yeah, it looks like these shorts are all, yes. Some tickers are very annoying. You'll see that like it's like this is like the S&P futures thing. It's just like pick a better ticker. Oh yeah, that's great. ES is a definite hold. All right, AMH, and then we're getting to the end here. Where I took my new stocks. This is going to be the closing positions probably isn't as valuable, but this is just like maintenance. All right, so we're not closing any shorts. Now we are ready for. Actually, Stephen, what's the live market? We're ready to write that.
Live market is QQQ is at 37, and the SPY is at 54.
So what's going on? What's going on with that option sentiment in Meta?
So Meta is at 92. It's kind of trending lower, but it's up like in the overall chart, but it's up from this morning. It was at 88.
Yeah, that's a good trend. That's a nice recovery. What is going on with CACC? I had that last night.
CACC is at 74. It's down from 80 this morning. Kind of volatile. It's had a few low spikes in the
We're going to
past
keep
2
our
weeks.
eye on CACC. Okay, we got that done. All right, now it's almost. I'm always so relieved when I get this done, Stephen. Especially if we do the model portfolio too. I can't even tell you how nice it is to just get. Because otherwise, I'm just like I'm often like doing this at the end of the day as well, and so it's just like yeah, okay. So we have 17. There's no rhyme or reason to 17 longs and. I don't. It's so weird. I want to have a 30 typical. I just don't. I don't like this. We're obviously leaning a little short. We have that ready. All right, now we're ready to go into the metrics. I finally got that part right. Stephen. The social sentiment, option sentiment twist. We got your profitability here.
Oh, we just got Wolf joining the stream. Nice to see you, Wolf. One of our best viewers, most frequent visitor.
One of our most passionate listeners, I would say. We always love to hear from him. He's got a lot to say. We like people that have a lot to say. I have a lot to say too, so it's good. It's good when someone helps me fill the space. All right. NVIDIA keeping that high short pressure. Meta short pressure went down. It scared away the shorts. Wait, where was SMC on? I'm just curious. Short pressure is still bad. Before it gets filtered out, I was just curious. Anything here? I think we might. I don't know if we want to get in on Eli Lilly again. But NVO is being interesting. Do we have an open ASML, Stephen? Ooh, how about Snow? Tell me if we. I know we've been opening and closing it. Let me know if we have an open ASML.
Gotcha. We do.
Okay. This is a tough call. I am gonna ask now. Oh yeah, nice on the 2-hour chart. I'm gonna ask now. Okay. I don't care what you say, Stephen. You can't stop me. Actually, I don't want to. I don't know if today's the day to add Eli Lilly, but Novo Nordisk has been doing interesting things. Oh yeah, we're doubling up on that. I don't want Chipotle though. We gotta delete some stuff here. We're just gonna do this. How about MCK? Do we have an open MCK? An open MCK and an open Amazon, and then I want to know for those for MCK and Amazon what you're seeing on if they're open and if they are, if they're not open,
Both are open.
what both are open. MCK and Amazon. Okay, actually, tell me the trends, the net option sentiment trends on them.
Okay, MCK trending higher. It's at 86, the high of the entire trend right now. Opened at 83. Looks like a positive trend for MCK. Amazon is at 94. It was at 91 earlier today. Pretty stable. It's kind of flat, the trend.
So, we have an open DEI on GLPG.
All along still, right? DEI, we don't.
No, we're in shorts now.
Okay.
SPWR is just like trash.
DEI, no. Was it on GLPT?
GLPG.
Yes, we do.
Oh, I have to update the price on that. That one is like a non-price updater. We're definitely getting it. Bank of Hawaii, I believe yes. Bank of Hawaii and Wish. Sorry, I know we're just.
Bank of Hawaii, yes. Wish, no.
Yeah. What? I don't think we're in Wish anymore. We're getting in Wish. How about FMC?
What was that ticker?
FMC.
S.
FMC.
Gotcha. No, we don't.
Tell me the net option sentiment trend on FMC.
Ooh, hitting a new low of 12. Oh no, it was at 11 this morning actually. It's at 12 right now. It's downtrending. Looks bad.
We're grabbing UBX. Do we have an open UBX?
Yes, we do.
We're gonna do one more. That's about to go south. We're tired of doing this. We're almost done. It's the home stretch. We're gonna get a little lazy. Oh, we have room for one more after all that. Ouch. Steven,
Oh, I didn't hear you say anything. What'd you ask?
do we even open out?
Ouch.
OUT.
We do. We actually have two open.
All right. All I can see. It's just gonna sit this little time now. All right. Oh, we're so close to the end. I didn't eat breakfast. I don't know if anyone saw me scarf that delicious Japanese donut. It wasn't enough, but it was a delicious Japanese donut. I was previously living with my sister and her dog, which was great. I don't know who saw on the live stream. But my parents would be in that place sometimes, and I couldn't keep it was like so the refrigerator, everything was like so overrun, and I couldn't have anything that I wanted in there. And like it's just been so nice. Ordered
I
these
am gonna miss
Japanese
seeing the
snacks.
seeing the puppy. He used to hop in some of the streams.
He's gonna visit. I don't know if it like yeah, I don't like the problem is I don't know he might not make it on the live streams. He doesn't have a good spot anymore. Um but oh man, this is just working out. All of these look like not a good sign for the market. Oh, SITC. It's going up. Another one. We were on a real streak. Oh, we know FMC. We're doing that. I think we looked at. I think you told me. I don't remember what you told me about CHK. We don't care. We're like in the home stretch here. We're just like we're adding indiscriminately here. See, this is how fast we go. Sometimes we don't even check the technicals. It's very different. The newsletter picks. To those that are still wondering that maybe that stayed like the newsletter picks. I labor over the whole weekend. I actually have an intern who's doing very well. Shout out to Galina, who has done a very, very good job as a college intern, like learning all this stuff. So, like, if any of you are wondering if you can learn, you can. And I've been teaching someone who's 19, I think, maybe 20. I don't know what. it's very attainable to learn this stuff. She's actually taking like the first drift of my newsletter, so I can like focus on like a lot of this other stuff. Like the signals are just like the signals are the signals. You can learn that. You can learn these concepts. It's all just like what I'm showing you. And I'll actually show you, I'll show you guys actually how the newsletter's formed. Like this is a more complicated technical setup because I'm looking at like a few other things. But after I'm done, I will actually show you guys, I'll actually show you guys what I'm looking at. I really want it just because it's a good, I love tech. Oh yeah, I love having tech in this portfolio just because. All right, here we go. We're about to send, and actually I'm going to send it at exactly 12:50 because I actually like to, for picking these numbers, I actually really like to, where did I go? Where did I put that? Oh, there. I actually really like to, see how fast we do this? This is very different than the newsletter picks. Like, I will pretty much, on each newsletter pick, I will spend about a half hour before I like verify it, at least. In addition to like studying the market trends. So it is a very, very different process than this, but it does show off the power of our signals in different ways. I'm going to get one more before I press send since we have like 3 minutes to round on this. I'm going to get one more look. QQQ opposite sentiment up to 43. That's nice. 54. Oh no. That's all right. Blah, blah, blah. That's good. Good, good, good. All right. One of the things I wanted to show you was like this. So like all of this, so these are the daily, right? So like when we make this, I'm just doing like, you don't need a complex technical setup. PT, CT, stock. I'm going to show you exactly how I do, right? So you go here and we go to technicals, right? I like to lean on the day, right? And it's just that simple. I'm like, okay, Prospero doesn't like it. The technicals don't like it. Passing grade. Like we can look at a few more. Let's look at one we rejected, because maybe that gives us a good idea before we press send. What got rejected? I think JWN we didn't add. Let's look for a second. I'm gonna press send on this because I believe by the time it hits the inboxes, it'll be 12:50. Ending long, exit long, blah blah blah. Done. We're done there. Oh, rapidly hitting the end here, Stephen. This is great. This is great, great, great. All right, so let's see what got rejected. Out, right? No, wrong set. Out got rejected. Oh no, out got rejected because we had multiple. I think SITC did, right? So SITC. Let's see how for you guys how you would verify how this works, right? So yeah, sell on one day. But let's like look. You have 4 hours to see. That's what I'm basically seeing. It's turning around in the short term. I don't love that, right? I don't love that as a short. I don't love it in a larger portfolio. It might be good enough for you, but the truth is, especially if you're trying to do this quickly, you guys are on a schedule. Like I don't know. It's just too much for me. Too much risk, right? And then I'll go look. I'll go look at one more thing. It is SIGC. I'm looking at in Prospero. Right, I do like that net option sentiment trend. Right, I like it. But to be honest, I like its low probability plus growth, 39 plus 13. That shapes up. But 34 upside, 54 downside. I'd like it to have higher downside than that, to be honest. Like 37 in option sentiment is also a little higher. I'd like that to be low. If you look, we actually, for our newsletter here, we actually filter out anything less than 40 net option sentiment, right? Or we say it needs to be less, right? So you look here, that's why these got filtered out. But if you look at the ones I picked, 31, 19 net option sentiment, 7, 23. Well, that's an error. 51. I missed that. See, we all miss things sometimes. But let's look at the trend on E. I think it still went well. But that's what I do. That's what you guys can all do. Thanks for all the new people that watch this week. We do this every week at the same time. And please start coming, ask questions. Again, I'm putting my email one more time. You can I am not kidding. I am happy to help anyone grow on their investment journey. You don't have to use Prospero. And I'll tell you if I think Prospero is right for you. I think that I like to spend my time helping people learn to invest, whether they use our products or not. I think we're done, right, Stephen?
Yes, we are finished for today. We will be back Wednesday, 3 p.m. I just want to thank Wolf. He was great in the chat for the time he was in here. So thanks for joining in and being so cool, Wolf. But yeah, we'll be back Wednesday on Twitter
Oh my
and
God,
YouTube.
should we take one more look at where the portfolio is? We're down to 436 above the S&P.
Only 436, George. That's it.
I know. We're live streaming. My hands have been off the wheel.
True. You guess you
All right,
won't get that day off at 500%
Oh
tomorrow.
yeah, exactly. I never get any days off. We didn't do. I wanted to look at one more thing. I'm gonna see if I want to drop CACC from the newsletter picks right now. Okay, so it's back up to 79 in option sentiment. I like that, right? We saw it go down a little bit. It opened the day at 78, and I think it was lower, but we're back up to 79. So that's kind of at the higher level that we see in that time series graph. And I'm just pulling up the Prospero time series. And then look at this bonus cover. It's very exciting. We're just going to see one more. I just want to take a look at we're recovering a little on the 15. I'm definitely going to have my eye on this. We're going to look at the 5. Are we going to look at the 5? Yeah, I'm going to have my eye on this, but for now, we're going to hold. All right, that's really all. Thanks for coming, everyone.
Thank you, George. Thank you to our viewers. See you everybody Wednesday. Good luck with your investing. George is out. All right, see everybody back here Wednesday.